Good evening, everyone. Thank you so much for joining today's webinar. So today we'll be discussing about the latest additions across MojoOne products. We have 10 stocks which have entered in last 1 week. So I'll take each stock one by one. So before we start, let's start with our disclaimer. We emphasize that all investors should use the information on the webinar merely as a resource to enhance their own research and understanding. Nothing discussed in this webinar should be considered investment advice. We strongly advise all participants to check with certified experts before taking any investment decision. So this is regarding our 9th anniversary special offer. As you already know, you must have seen the prices have increased across the site. But for this webinar, we are still giving you the 9th anniversary offer. So for MojoOne subscription, you get 2 years free for 1 year subscription at a massive 83% discount. Similarly, for Mojo Professional, you can subscribe at 17,999 and get 2 years additional free subscription at 70% discount. So this is our weekly advance ratio. So you can clearly see momentum now and reliable performers have outperformed the benchmark, and hidden turnaround is very close to the benchmark, and Mojo stocks hasn't performed this week. To start off with the market cap bifurcation, we can clearly see large cap has 71% stocks in Mojo stocks, and in reliable performers we have 28%. Next, looking at the top gainers for each of the strategy in last 1 week, across Mojo stocks, we have seen Jupiter Wagon, which has given a 16.5% return, and in hidden turnaround, Southwest Pinnacle has given 21.7% return. In momentum now, you can clearly see Mascot Dock has given 23% discount, 23% return, sorry, and in reliable performer, KEC International has given us 22% return. In the major indices that have performed last week, we can clearly see small cap and mid cap outperforming, and Nifty has given us 0.8% return, and Sensex has given us 0.4% return, with FMCG and IT sector underperforming. So here are the 10 stocks that has been added in the last 1 week. So we can clearly see two stocks have been added for Mojo stock, and 1 stock has been added in hidden turnaround, and we have 6 stocks that have been added in momentum now list, and 1 stock from reliable performer. So I'll quickly take one by one and give you the rationale why we have added this stock. Okay, now let's start with BASF. So BASF is a large cap stock which has been added for Mojo stock list on 11th of June. BASF is a part of BASF group is a part of BASF group based out of Germany. It's a chemical company involved in production of agrochemicals, petrochemicals, and its intermediaries. The company's products also cater to wide array of industries such as agrochemicals, pharmaceuticals, petrochemical. The company receives operational, technical, and financial support from its group companies, and they take a royalty for that. The company has 4 manufacturing facilities that is present across states of Maharashtra, Karnataka, and Gujarat. So here, when you look at the financial trend, you can clearly see in last 3 quarters it has given us increased score across the financial trend, and we expect it to go further. In the revenue breakdown, we can see the materials and industrial solutions has been the major contribution. So before we start off with why more BASF stock, here we can see that the company has recorded a good result in last quarter, which ended in 2024 with a revenue growth of 3%, with improving demand from international markets. The company also witnessed an operational margin of 7% for the quarter. Consequently, profits for this quarter has increased by 98%, which sums up to 162 crores. The company has a very tight control on its working capital with cash conversion cycle of 21 days. And very interesting fact which I want to get to all our attendees is the company has a really low 3-year median payout of 7.2%, meaning that the company has been utilizing 93% for reinvesting in its business. And additionally, the company has paid dividend in last 10 years, which means the company is pretty serious about sharing its profit with its shareholders. The company is currently running at 80 to 85% utilization, and management has not given any guidance on capital expansion in the coming year. If you look at the quarterly financials, in last quarter, it has improved. The operating profit and net profit has increased by 16%. And if you look at year on year, it has grown massively by 84 and 98% in profit. and these are the returns of the company in last 10 years. You can clearly see this company has been consistently beating the benchmark and giving positive returns across last 10 years. The shareholding pattern has remained the same. There has been no change in last quarter versus last year. Now coming to ACC stock. So we have added ACC in our Mojo stock list. It's a cement company, and everyone knows this has been recently bought by Adani. Adani consists of ACC, Ambuja, and Sanghi, and has a manufacturing capacity of 78.9 MTPA as of 31st March 2024. The conglomerate has a presence across the country, covering 75% of total districts, over 580 districts, with 18 manufacturing units strategically located across the country. It has also 86 ready-to-mix concrete plants across the country to cater to major infrastructure projects across the country. And when you look at the financial trend of this company, you can clearly see in last 4 quarters it has given positive returns, and we expect that to go on. Why ACC? The company has achieved its highest ever quarter sales in the quarter ending March 2024. The company also recorded a sales of 5,000 crores, growing at 13% year on year. That growth has led to volume growth of 23% year on year increase in the quarter ended March 2024. The company achieved the sales of close to 20,000 crores for the year with a profit of 2,300 crores. The operating profit in the company improved as there significant reduction in power and fuel cost, freight costs, and other subsequent costs. And also, what Adani's plant of cement suit reflects that strategic move to dominate the cement industry through the market expansion, strategic acquisition, and increased production. And operating profit of the company has also improved to 15.34%, which is 600 base point improvement over last financial year. Here you can clearly see quarter on quarter the company's net profit has grown by 76%, and if you look at year on year it has grown by massive 300%. Now when you look at company's performance in last 10 years, you can clearly see the company has given positive performance, and in all the across all time zones you can clearly see they have outperformed the benchmark. The shareholding pattern has remained the same. There has been a marginal increase from DII, and public holding has gone down by 1%. Now coming to Donier Industry, it's a microcap stock which has been added for hidden turnaround. Donier Industries is involved in the businesses of textile manufacturing and sales. They are involved in suiting, shirting, institutional sales, and export. The company is involved in manufacturing of suits, clothing, and operates under a brand name such as Real Life, Plasma, and Clifton. In institutional sales business, the company provides blue-collar clothing to some of the largest conglomerates in the country from sectors such as automotive, aviation, defense, and government bodies. And it also operates ready-to-wear collection for retail segment under the brand Decot and Donier NXG. Now, if you look at the financial trend, it has improved. As it's a hidden turnaround, we feel, although it has not performed really well in last 3 quarters, in this quarter it has resulted a positive growth which has a score of 14, and we believe going down the line it is going to improve. Hence, we have added this in our hidden turnaround list. The company has also achieved its highest ever quarter sales in the quarter ending March 2024. And before I read out all these points, I would also highlight one of the interesting points about Donier Industries, that its P ratio is currently at 19.4x, and compared to the other companies that we are seeing in this sector, they have a P ratio of 32x and 62x. So hence this makes the PE ratio very attractive at 19.4x. The company has also achieved a sales of close to 800 crores this year with a profit of 35 crores, which stayed flat over last financial year. For this financial year, the company generated a cash flow of 71 crores from the operations, which is 88% of EBITDA, suggesting good cash conversion. The company carried inventory of 289 days for the year, thus requiring a lot working capital to manage its daily operation. As of 31st March 2024, the company has short-term borrowings of 320 crores. Now, if you look at its quarterly results, we can clearly see the company net profit has grown by 129% quarter on quarter, and on year we can clearly see they have grown by 78%. And if we look how the company has performed across different time horizons, you can clearly see in 10 years the company has given us 700% return compared to the benchmark of 206%. So this company has consistently given us returns which are more than the benchmark. In fact, if you look at it, it's more than 2x, 3x compared to the benchmark. Now, the shareholding pattern has remained consistent across last 2 quarters. Next, we come to a new stock which has been added to Momentum Now list, Alphagio India. So it's from oil exploration sector. This company provides geophysical and seismic data services to refineries such as ONGC, GAIL, Petronas, Oil India, and other companies. The company also offers services such as seismic data collection, processing, interpretation, reservoir data collection, and analysis. The company also provides other services such as topographical surveys, airborne surveys for mapping out mineral exploration sites, and others. Now, how the company's financial score has performed. So, when you look at last 5 quarters, you can clearly see, except last 2 quarters, the other 3 quarters has been on downfall. But we believe, the company's score has increased from 10 to 33, and we believe this positive trend is going to continue in coming quarters. Why Alphagio? The company recorded a good quarter for March 2024 with revenue growing 267% over the same quarter last year. The operating profit for the quarter stood at 15 crores, improving significantly from 1 crore which was recorded in last quarter. The operating margins in this quarter has also improved to 28%, a significant improve from 7.5% which was recorded in the last quarter. The profit before taxes in this quarter stood at 7 crores, an improvement from negative 1 crore, and also 4.75 was its previous quarter. So when you look at its financials, you can clearly see the operating profit has gone up by 300%. However, the net profit has gone down by 11%. But we believe, like, going down the line, this company is going to explore. It's going to give us better. It's going to give us good returns. And also, when you look at the various time period, you can clearly see the company has been giving positive return. However, in most of the scenarios, you can see it has not performed the benchmark. Now, a shareholding pattern has remained same across last 3 quarters. Now, coming to a company, Health Global. So this is a mid cap stock which has been added to the healthcare sector on 11 June 2024. It is one of the leading cancer care provider with a pan-India network of hospitals and cancer care centers operating under the name of HCG. These centers are equipped with latest technologies and experienced medical professionals for cancer care. This company is also involved in fertility and reproductive medicines under the brand Milan. The company is also engaged in providing clinical research on cancer, proprietary analytics, developing geometric technologies under the name Triesta Science. Now, when you look at its financial score, since the year 2021, we can see this company has been giving consistently a positive score, and the score has been always about 20 on an average. And in the last quarter, it has given a CFT score of 20. Now, when you look at the revenue breakdown, so HCG Center contributes to 96% of its revenue. Now, why did we choose the stock for Momentum Now? The company has achieved its highest ever quarterly sales in the quarter ended in March 2024. The company also recorded sales of 495 crores, growing at 12% year on year. Currently, the profits of this quarter has grown by 283%, which is a massive growth to 23 crores. The company also achieved sales of 1900 crores for the year with a profit of 41 crores, a growth of 130% over the last financial year. The operating margin stood at 17% with established centers operating at 20% and emerging centers operating at 9%. And one more interesting fact which I want to tell about Health Global is, despite this company having high ownership from insiders, the founders have no plan to alter their stake amidst potential acquisition interest So they have been getting interest regarding acquisition from companies like Temask and all. However, given the interest, the company is not letting go of their shareholding. They're not letting go of their shareholding pattern. So this actually shows us that company is the management and the founders are very serious to grow this company, and hence we believe this company has a very good potential of growing in coming years. The company also has added two hospitals in Bangalore with a total of 125 beds, which should be operational in next 15 months. The company has incurred a capex of 187 crores in this financial year. Major chunk of this capex has gone in upgrading its established facilities. And when you look at its quarterly financial analysis, in last quarter on quarter, they have improved their profit by massive 667%. And also, if you compare to last year on year, the company's profit has grown by 283%. Now, if you look at how the company has performed and how the company has given returns in various time period, you can clearly see the company has been consistently giving positive return and has outperformed the benchmark at every time period. The shareholding pattern, as I told you, company, the promoters are holding 71%. In spite of outside interest regarding the company, the shareholders and founders are very serious about the business, and they are not letting go of their shareholding pattern at the moment. Now coming to Mahindra Holiday. So this is a mid-cap stock from the hotel industry which was added on 11th June 2024. So Mahindra, as everyone knows, it's into luxury holidays and all. Their main business is from selling membership to its clients for vacationing at a premier and luxury resorts. The company operates its resorts and vacation homes under the brand Club Mahindra. As of 31st March 2024, the company managed 151 properties across the globe with 82 properties in India. The company now currently operates like over 500 rooms and witnessed occupancy of 85% for this year. In India, the company has a compelling presence across south, west, and northern part of the country. Now, when we look at its financial score, here we can clearly see the company has given us a very good positive score of 26 in the last quarter. But if you look at last 10 quarters, the company has been consistently giving very good CFT score. Hence, we believe coming after our monsoon, we believe with Indians vacationing has increased. So we believe after monsoon we are going to see a positive score as well. And now, why did we choose Mahindra Holiday? The company has achieved its highest ever quarter sales and profits in the quarter that ended in 2024. The company recorded a sales of 800 crores, growing by 12% year on year. And the profit for this quarter has also grown by 48% to 83 crore. The company also achieved sales of 2700 crores for the year with profits of 116 crores, flat growth over last financial year. And also one interesting fact which I want to get about Mahindra Holiday, Kavinder Singh, the MD CEO of Mahindra Holiday and Resort, he says that cash on books are about 1300 crores. The company may not require debt to fund inventory addition. So that is a very positive sign. So the company says they have surplus capital to grow their business. Deferred revenues improved to 595 crores in this financial year, an increase of 5% from last financial year. So this clearly suggests there's a strong pipeline for new memberships. The company has been able to generate strong cash flows from operations given its membership business model. The company generated 624 crores in last financial year, which is 122% of its EBITDA. When you look at its net profit, in last quarter we can see the operating profit has grown up by 78%, and year on year the operating profit has grown by 13%. But very interestingly, when you see last quarter, as I told you, this company has recorded its best quarter ever. So this company's quarter sales has increased by 655%, and year on year we can see a massive increase of 50%. Now, how has the stock performed over different time period? When you look at last 10 years, the company has been giving us positive return. And if you look across different time horizons, maybe take it 2 years, 1 year, or 5 years, the company has been performing or outbeating the benchmark. Now, if we look at the shareholder pattern, it has remained same across last 3 quarters. Now coming to Suntech Realty, a mid-cap stock from real estate sector, which has been added on 11 June 2024 for the Momentum Now list. So Suntech is one of the India's prominent real estate developer developed in identifying and acquisition of land parcels to execution and marketing of real estate properties. The company has a track record of delivered 18 projects successfully. The company has established a major strong foothold in Mumbai region, which is one of the largest and fastest growing market in India. The company is also involved in rental business with two commercial assets named Suntech Icon and Suntech BKC in BKC, Mumbai. Now, when we look at its financial score, you can clearly see in last 6-7 quarters, it has not given any return, but in last quarter it has outperformed and it has given us a score of 40. And we believe with its growing credibility in Mumbai region and their expansion plans across other parts of India, we believe this CFT score is going to improve, hence resulting in increase in its revenue and returns for its shareholders. The company has recorded a stellar quarter by registering a sales of 427 crores, which is a massive 774 crores on in the last year on year. This growth in revenues was a result of completion of Suntech Max World in Naigaon, leading to initiation of revenues from this project. The profits also in this quarter stood at 100 crores, which resembles significant growth compared to a loss of 28 crores in the same quarter last year. And also very interesting point, the company's rating has been upgraded from AA minus to AA. The company is planning new projects in Nagaon, Mira Road, Oshiwara regions of Mumbai. The management also has indicated new projects for Neopan C Road and Bandstand. So how the company has performed last quarter? The revenue has increased by 917%, and also like last year on year, if we look at the increase, it is more than 700%. Now, how has the stock performed at different time period? So we can clearly see this company has been giving us positive return. However, it has not outperformed benchmark at various time interval, but we believe with its growing popularity in Mumbai and giving and able to deliver successful projects in last 5 years, we believe going down the line with its upcoming very interesting projects across the C-Link and Bandstand, we believe this company is going to improve and give us very good returns going down the line. And the shareholding pattern has remained the same. However, there has been a little bit up and down across FII, but that is totally fine. Now coming to the next stock which has been added to Momentum Now list is Privi Specialty. It's a small cap stock from chemical sector. It has entered the list on 12 June 2024. This company is primarily focused in manufacturing of aromas and fragrance chemicals such used in soaps, shampoos, etc. It is involved in export of such chemicals and supplies over 30 plus countries and 15 large FMCGs in the world. The company has set up 7 manufacturing plants across the country with a production of 48,000 tons per annum. The company has a backward integrated by producing 2 of its major raw materials in-house named crude sulfate turpentine and GTO. Now, how the company has performed and what has been its CFT score? We can clearly see, in the last 3 quarters, the company has given positive score of 10, 16, 27. However, if you go down 2022 and 2021, the company has not been giving, the CFT score has been bad. But if we look at last 3 quarters, the company has been giving us very good CFT score, and we believe down the line this trend is going to continue. When you look at the revenue breakdown, here we can see the benign is 62%, followed by Citral for its revenue. Why Privi Specialty? This company has recorded its highest ever quarterly sales in the quarter ended in March 2024. The company recorded revenues of 476 crores, a growth of 17% over the same quarter last year. The company also posted profits of 34 crores for this quarter, which is significantly higher because they were declaring minus 15 crores as a loss in the last quarter. For the year which has ended in 2024, the company recorded revenues of 1700 crores with a profit of 98 crores against a profit of 2020 of 22 crores in the last financial year. So you can clearly see the company's profit, the revenue has improved in this quarter, owing to significant reduction in power and fuel costs in last financial year. The company witnessed an improvement of 740 base point over the last previous year. And in the last financial year, we could see that exports contributed to 70% of the revenue, and the rest 30% was coming from India. The management is focused on value-added products to improve its margin. When we compare its operating profit, last quarter on quarter, it has grown by 1%. But if you look at year on year, it has grown by massive 184%. So how has the company performed at different horizon? So company has been performing on terms of in benchmark. However, it has not beaten benchmark across different time horizons. However, we believe coming days and coming days, the company is going to give us better returns. How the shareholding pattern, here we can see it has remained the same across last 3 quarters. The next stock which has been added to our list is Dollar Industries from small cap sector, from small cap market cap. This stock is from textile sector, and this has been added on 13 June 2024. This company is involved in business of hosiery products such as innerwears, outerwears, thermal wears, etc. They have different brand names. One is Dollar, Force Next, which includes innerwear, athletic wear, and activewear. The company has 4 manufacturing facilities in the country and exports its products to 15 countries across the globe. So how the company has performed, with its financial score. In last 3 quarters, we have seen the company has given a positive return. However, if you look at year 2022, in 2022, October, December, Feb, and May, the company was not able to give us, it was having a negative CFT score. However, this company has improved its CFT score in last 3 quarters. So revenue breakdown, menswear is 81%. Now, why Dollar Industries? This company has again recorded its highest ever quarterly sales in March 2024. The recorded revenue of 488 crores, which has grown by 20% in the same for the same quarter last year. The profit for the quarter stood at 32 crores, a significant improve over 4 crores, which was recorded in last financial year. For the year which ended in 2024 March, the company recorded a revenue of 1500 crores and profits of 89 crores. And also one more interesting fact about Dollar Industries, now the company is focused on increasing its presence across South India, and they are targeting targeting at least 50% growth in the sales and revenue from South India, and they've recently roped in Mahesh Babu from South India industry to as their brand ambassador. The management is opting for setting up EBOs for its Dollar brand to drive revenues. There are currently 17 EBOs, and the management has targeted 125 EBOs by 2026. The management is also looking to grow from in women's wear segment and also aims to improve its share in the revenues. Now, how has the company performed in last quarter versus year on year? You can see in the quarter, in operating profit has grown by 78%, and also year on year the operating profit has grown by 600%. So how has company performed over different time periods? Here you can clearly see the company has been giving consistent returns. However, there are some time frames where the company has not performed the benchmark. But given the company's vision of growing in South India and targeting, other segments, we believe this company is looking for expansion and also a growth. So now looking at the shareholding patterns, the shareholding patterns, has remained the same across last 3 quarters. Now the last stock which has been added to reliable performance is a Blue Cloud Softtech, a small cap company, a small cap company from IT sector. This has entered the list on 10th June 2024. this company is engaged in providing AI-driven solutions for data processing, cybersecurity, cloud infrastructure, healthcare management, etc. The company has recorded its highest ever quarterly sales and profit in the quarter, which has ended in 2024 March. The revenues for the quarter stood at 213 crores, a growth of 27% over the previous quarter. The profit for this quarter stood at 8.6 crores, giving a growth of 110% over the previous quarter. Revenues for the year that has ended in 2024 stood at 500 crores with a profit of 16 crores. So how has company's financial trend performed? You can clearly see in last 4 years the company has been giving us positive score, and in last quarter especially the score has jumped from 20 to 42, and we believe with the AI and the automation which is growing at a tremendous pace, we believe this company has a very good scope of exploring that and acquiring new customers, and we believe this financial trend for this company will be improving in coming quarters. And also, if we look at last quarter on quarter, the revenue has grown by 27%, the operating profit has grown by 54%, and also the profit has grown by 111%. So how has the stock performed across different time periods? Here you can clearly see the company has been outperforming the benchmark and has given positive returns across last 2 years. The shareholding patterns, here you can clearly see what has happened in year December 2023. The public was holding 73%, and suddenly the promoters score has jumped. Promoter shareholding pattern has improved from 4% to 34% in the last quarter. Okay, let's proceed with Q&A. Excuse me. Yes, sir. So CNS has a question like, I want to purchase RCF at current market price. Please advise. Okay, sure, sir. So let me just take you to the MarketsMojo site. So, sir, as per MarketsMojo rating, currently it is on hold, and you can always download the verdict report to understand why it is on hold. And we have two better stocks that we suggest currently. If you want to go to RCF, we are suggesting Symphony and Hindustan Aeronautics as better choice for it. And one of the reasons why we have put this company on hold is you can clearly see the company has given negative results in last 5 quarters. However, technically it is at bullish range, but then even its valuation. So let me quickly look at its valuation here. We believe currently it is priced at 173. Maybe and it is expensive as per our system. And you can clearly see this is one of the factors why we are not suggesting buy. However, the technical we have clearly seen it has turned bullish, and the quality of company is average. And if we look at the financial trend of the company, you can clearly see in last 4 quarters it has given negative return. So this is one of the reasons why we have suggested it to hold. So, sir, I would suggest you have better two options. One is Symphony and Hindustan Aeronautics, which you could explore. Okay, next question is from Sunil Kaul. Hi, I am Mojo subscriber since 1986 and have subscribed up to 2031. I have been facing problems in my account. The system doesn't allow to download additional model portfolio with message. Account already exists. Okay, okay, Sunil. What I can do is I can ask my team to check it. However, just to give you a quick run through, our model portfolio is one of the most used products. And let me just show you how to use it. So we've been getting a lot of queries from new users regarding how to use model portfolio. So I'll just share my screen. So you can just go to model portfolio, enter the amount, click the risk profile that you wish to start, and then you can generate. Okay, I can clearly see there is an issue. I'll just check with my team and get back to you. Okay, next question. Okay, thank you so much for joining today. Hope to see you next week again. Thank you.